Hello, everyone, and thank you for joining us for another SCRLA webinar to help you, our members, be operationally efficient. I'm Douglas O'Flaherty, and I will be today's moderator. Today, we're talking tax credits. This past December, President Trump signed into law the Consolidated Appropriations Act of 2021, in that expanded the eligibility for the Employee Retention Tax Credit, also known as the ERTC, whereas you may be eligible to get up to $19,000. If that wasn't enough, we're also going to hear a little bit about how businesses located in qualified disaster zones, and we have many here in South Carolina, as you will learn, may be eligible for federal disaster relief credits up to $2,400 per eligible employee. With us today, we have Lori Childress and John Hostetler with Empowered Solutions. John is the current managing partner, the former director of business development, one of the nation's largest tax solution firms. John has helped commercial real estate owners, investors, and business operation entities realize significant tax savings and increased ROI through valuable tax planning tools, such as accelerated depreciation, capital reserve analysis, economic development programs, and energy efficiency. He also works closely with accounting firms to provide valuable resources for their clients. John provides continuing education and practice development through seminars in various professional organizations throughout the year. John has over 14 years experience in the real estate and the business development arena, has worked with a wide range of property types to include retail, medical, multifamily, office, restaurants, energy facilities, multi-phase, mixed use, and large-scale planned development communities. Joining him is Lori Childress. She is a vice president of business development from Anderson, South Carolina. As a graduate of the University of South Carolina in hotel restaurant tourism management, we know Lori is well versed in hospitality. Lori's career has been spent in both the hotel and the staffing industries, in both sales management and recruiting. Lori joined Empowered Solutions Group about a year ago to serve as South Carolina in the business development role to assist her clients in researching federal, state, tax credits, economic development, cost segregation studies, and other research development opportunities. At this time, I'd like to turn it over to John to tell us a little bit more about Empowered Solutions Group. John?
Well, thanks, Doug, for the kind introduction. Yeah, Empowered Solutions, we're located down in Charleston, South Carolina. We specifically in Daniel Island, and we've been in business for about 6 years, but collectively, with our team here in Charleston, we have over 75 years of experience in working in different tax-based strategy, strategic services, economic development services, and different federal energy programs that are available to our clients. So, our three areas, Doug, that we found that are our core competencies are our tax-based strategies, for economic development, and those energy services. Over those 6 years, we've been able to offer these boutique services to lower operating costs for businesses, looking at different tax credit programs that are at the federal, state, and local level. And we've been able to have strategic partnerships with our CPA partners throughout South Carolina and in the country.
Great. You want to tell us a little bit about federal disaster zones?
Yeah, the federal disaster zones, it was a program that was initiated back, if you guys are familiar with Hurricane Katrina that happened down in New Orleans. That's when the first federal disaster zone was initiated in the US. And since that time, there's been obviously numerous natural disasters across the US, and those can vary from hurricanes to fires to flooding, whatever those may be. Those are designated by the federal government, specifically the Department of Treasury and FEMA. And once those disaster zones are declared, then that opens up federal monies and different programs that are available to these businesses that were affected by the natural disasters. So, today we're talking specifically about South Carolina. Hurricane Florence in 18 and 19, if you remember, came up the coast of South Carolina. It hit us a little bit in Charleston, but it affected more of northern eastern seaboard of South Carolina, specifically Georgetown County, Horry County, and then went up and on the eastern seaboard in the southern part of North Carolina. So from that storm, there were eight counties that were designated as federal disaster zones from Hurricane Florence, and 13 counties in North Carolina that were designated disaster zones. And what we found over the years is that there's sort of a disconnect between, you think of tax credits, you think of your CPA, whereas a lot of these programs, whether they're federal programs or whether they're state or local programs, they're through the Department of Commerce. And so what we found is, you're working with the Department of Revenue. If you're on the tax side of things, there's Department of Commerce that have these additional programs. And so sometimes these programs get lost in the shuffle where, when these small businesses, or for that matter, any business, as they're affected, these kind of programs have real bottom line impact to help these guys out when they need it. So, digging into a little bit of the details on the federal disaster zone, it's an employee retention income tax credit. So if you're in one of the designated zones, and let's talk specifically, Doug, if you don't mind switching back to the map there. If you talk specifically, let's look at Horry County, for instance. If you're a business in Horry County and you continue to pay your employees during a hurricane, when Hurricane Florence came through, then you're eligible for the tax credit and potentially can qualify. So, people like to say, well, what, did my roof have to blow off, for me to be able to qualify for this tax credit? No, it did not. You just have to be affected by that. And that term affected can be defined in a number of different ways. And so, having completed, over 200 projects, primarily in South Carolina with federal disaster zones, we have a firm understanding of what qualifies and what doesn't. So with that, 40% of the qualified wages up to $6,000, so $2,400, you can qualify for each employee in the federal disaster zone. And with those credits, they do have a carry forward provision and a 1-year carry back provision with those. So, what we tell people is, look, if you're in one of these designated counties, you were in business in 18 and in 2019 during those designated times, incident periods, then it's worth taking a look at to see if you qualify.
That's great. Do you want to talk a little bit about the employee retention credit?
Yes, with the employee retention tax credit, I think there's a couple things stepping back, with the Hospitality and Restaurant Association. What we found is that these two particular programs can have a major impact. And outside of the federal disaster zone, with the pandemic that everyone has dealt with over the last year and 3-4 months, with the initial CARE Act, there was a lot of confusion coming out of, look, how is this pandemic going to affect my business? What particular programs are available? Are they retroactive? Are they, income tax credits? Are they payroll tax credits? And as everyone sorted through the PPP loans and the particular programs that were available, with this particular, what we have designated as a CVERC tax credit, it is a payroll tax credit that can be taken for qualified wages. And the guidelines for those in 2020 differ from 2021. In 2020, it is capped at $5,000 per employee, and you have to have at least 100 or less than 100 employees to qualify for that particular credit. Now, initially, when this legislation was passed, you could not take both the PPP money and the employee retention tax credit, but that has since changed with the relief bill that was signed into legislation that you mentioned before, Doug. But with this particular credit, you're able, as 2020, $5,000 per employee per qualified wages, and then in 2021, that is bumped up to $7,000 per employee per quarter. So the max, as you stated before, is $19,000 that you can qualify for the employee retention tax credit. It's also important to note that it is a payroll credit, not an income credit, and it is a refundable tax credit. So no matter how much you paid in, how much ever you qualify for, you're going to get those refunds when you file your 941X with that credit.
That's some great information. And I think that it's really important to point out about that refundable tax credit. So if someone didn't take the credit last year, they still can go back and claim it. So that's fantastic information.
Well, and that's a common misconception too, that if I didn't, Hurricane Florence came through in 2018, the designated incident period actually flowed from 2018, September 2018 into 2019. And, well, we didn't take advantage of that credit then. Can we still do that? And you certainly can. All you have to do is go back and amend your tax return, as long you have a 3-year statute of limitations on open tax years.
And John, correct me if I'm wrong, once those credits are used or obtained, rather, if you don't need them this year or next year, they carry forward up to 20 years. Is that correct?
Yeah, so with the federal disaster zone income credits, there is a carry forward provision for sure. And with the payroll ERC, that is a refundable credit that you'll be getting a refund. So by filing the 941, yes.
It's a win-win situation.
Yes.
There is a win-win situation. Any final thoughts before we go into any questions that we have?
Well, one of the things that we've heard, Doug, is that, people are trying to understand, look, our business, we had a great year. We really weren't affected that much by COVID, or we were affected a lot by COVID. If you have, with the employee retention credit, if you have under 100 employees in 2020, you're in business, it needs to be looked at. And, some examples of that were, initially on the surface, when we looked at some particular businesses, they didn't seem to qualify. But when we looked into the sales data and broke that down week by week, we were actually able to get those businesses qualified. So there's a matrix of qualifying factors in these years, and they differ from year to year, from 2020 to 2021. And so I would say, if you're in business and you had less than 100 employees, it needs to be looked at for 2020, and that threshold is bumped up to 500 employees or less for 2021. So I would say the same thing for 2021 in businesses with 500 employees or less.
That's great. So Lenza, do we have any questions in our Q&A box?
Yes, it actually looks like we have a couple in here already. The first question: I am a restaurant owner in 5 Points in Columbia. After heavy rains, my restaurant floods. Do I qualify for the federal disaster zone tax credit program?
Well, Lindsay, will you go back to the map, if you would? So unfortunately, I live here in Columbia, South Carolina, and am very aware of the Five Points area that unfortunately does have flooding from time to time. So unfortunately, in that case, the answer is no. However, you would be eligible for the employee retention credit. And so we could look at that side, but that would not be part of an actual disaster zone, so to say. But you would qualify for other programs.
Lori, is the reason why they don't qualify is because it's not in an approved county?
No, it's actually just because it's not a federal disaster, meaning FEMA's been called in, meaning it's affected, miles and miles of territory, if you will. Unfortunately, that's a drainage issue.
Okay, that's a good one. All right, well, thank you. Lenza, any other questions?
Yes, we actually have a couple more that just came in. The next one, I lost power and had flooding in my hotel during Hurricane Florence. I'm in Horry County. Do I qualify for the federal disaster zone tax credits?
So again, Lindsay, if you'll go back to the map, and that answer is 100% yes. So Horry County is one of the 8 counties that was designated under the Hurricane Florence of the federal disaster zone tax credit. And basically, if you were affected in any way, you don't have to have lost a roof. You don't have to, in your case, I hear, you lost power clearly as a hotel, that shut you down completely. So you would absolutely qualify. We would do our due diligence in terms of some information that we need to find out how much you actually qualify for. So you're eligible for us to take a look, and then we see what you qualify for. That's a yes.
Okay. And it looks like the next 2 questions we have that came in relate to the COVID employee retention tax credit. So the first one, I took PPP money during the pandemic for my business. Can I still file for the COVID employee retention tax credit?
Lindsay, that's a great question. It's actually, it's a common misconception that if you took one, you can't have the other. In the beginning, that was true. However, once the president passed the CARES Act, you absolutely can have taken the PPP money in the beginning of the pandemic, and you are now eligible for that tax credit as well, that employee retention tax credit.
Okay. And then the follow-up question to that, if I am in one of South Carolina's federal disaster zone counties, can I take advantage of the federal disaster zone and the COVID ERC?
So absolutely. So if you'll go back to that map again, and we're just talking about South Carolina. So if you're a hotel in Horry County and you have another hotel in North Carolina right up that coastline, all of those are going to qualify, right? And then from the pandemic standpoint, you're also going to qualify for the employee retention credit.
Yeah, just to add, expand what Lori just said, they're both independent programs. The eligibility is designated for the FDZ if you're in that specific county, and the ERC is nationwide. So they're 2 independent programs, independent of each other. One's a payroll credit, tax credit, and one's an income credit. So one doesn't, taking one doesn't mean you can't take the other, or qualifying for one doesn't mean you don't qualify or do qualify for the other totally independent programs.
Right. And Douglas, I'd like to point out real quick, so we've looked at the South Carolina map many times during our conversation, and folks watching may say, well, okay, I understand these 8 counties, along the coastline, what's happening in Oconee and Pickens and Orangeburg and Hampton, et cetera. So those were federal disaster storms that were more tornado, lightning related. And those are more recent to 2020. So those are another set of counties, if you will, that qualify for disaster zone credits unrelated to a hurricane. I just wanted to point that out.
And it
Okay.
doesn't look like.
Oh, is there another one? Go ahead.
Oh, no, we actually don't have any additional questions that came through. So I think we're good to go. If you have any questions, just feel free to type them in the Q&A box and we'll be happy to answer them.
Well, great. And this is a great opportunity as well to thank Lori and John both for your expertise. This is valuable information. I think anytime that we can really learn more about tax credits, I mean, they're available to us to utilize, to understand. It's certainly complex. Appreciate having y'all today on the webinar to be able to tell us a little bit more about it. I have included on the slides their contact information, so you can reach out to them directly if you'd like to learn more about their business model and also learn more about how they can help you determine what federal disaster zone or employee retention tax credit you are eligible for. They've got a lot of great relationships and years of experience under their belt to help you. So if there's no more questions, Lenza, just wanted one last shot. Okay, so thank y'all very much. I appreciate it. John, Lori, our contact information is up, and we look forward to serving you in the future. Y'all have a great day.
Thank you. You too.
Thank you.